Hey everyone, Kevin here with Bullish Bears. Welcome back to another video, and I have a question for you guys. Are you having trouble finding good areas to enter your trades, having trouble understanding if the market's going to reverse, if you've been stopped out too much, or even if the market's going to continue trend? Well, in this video, I'm going to be showing you guys how to use buy-side and sell-side liquidity to understand more of where the market's going to go once we hit certain pivots and highs and lows. So let's get into it and I'll show you exactly how it works. Alright guys, so before you even try to attempt to find buy-side and sell-side liquidity, you have to understand what we're looking for, and the thing we're looking for is swing highs and swing lows. So a swing high would be somewhere that there was a reversal, but we put in either a higher high or a lower high, and a swing low would be somewhere that we also had a pushback higher, but it was either a lower low or a higher low. So we look for very key areas, strong areas that might signify, okay, there is potential stop orders here that could stop people out, and that is market liquidity that we need to continue or reverse trend. So here we would mark out some sell side liquidity. Up here we would look for some buy side. We could have buy side liquidity at this top candle. We could have some more buy side. We have another swing. See this pivot right here? We came up, we had a strong drop right after, so we would mark this as buy side liquidity. And what happened? We used this buy side liquidity as an area to stop hunt before we got a stronger move to the downside. So we would mark this out as buy side liquidity, and we would take this trade short. We would look for potentially a fair value gap or some other type of confirmation to enter this trade and push back lower. Now you might be wondering, well, what time frame do I look for when I'm trading and looking for buy side and sell side liquidity? Well, like most trading strategies, the higher time frame you look at, the stronger the zone and level. So if you trade supply and demand, support and resistance, Fibonacci, the higher the time frame you look at, the stronger. Same with buy side and sell side liquidity. You could look at it somewhere on a 15, 30 minute, a 1 hour, but me personally, I would prefer to use it on a weekly, daily, and 4 hour. That gives me a larger view of what the trend is doing in the market. So let's go over some examples of buy side and sell side liquidity. I'll mark out some key zones and key levels that I would look for. Now I would see this as a pivot right here is buy side liquidity, and I'll show you how this buy side liquidity doesn't look like it worked, but it did work in a way. Now what we look for when we look for buy side and sell side liquidity is obviously we look for some sort of rejection, right? We look for us to fail the break and reverse back, just like this sell side liquidity right here. We'll mark this out as sell side. This sell side liquidity from this candle, we reversed on these two to give us a push higher. We failed that push and dropped back lower, giving us another reversal and another quick move. Now if we're looking at this buy side liquidity right here, we didn't reject it, but we had a strong push through it and we closed far above it. Now when we get a strong close above that buy side or sell side liquidity, that means that those orders were consumed, all those stop orders, but the market had enough strength to continue through it, and we are looking for a continuation trade at that point. Again, we would look for some sell side liquidity. Some more examples would be right here, and this is the weekly time frame. This would be a sell side liquidity, and we had these two candles double bottomed at this previous swing low. Now let's look at a lower time frame. We could look at the daily, and we could just start marking them out. Now remember guys, buy side, sell side liquidity, it's not going to work every time. There will not always be a perfect buy side, sell side. It will not always come back down to a pivot, just like these over here. We have one, this is sell side liquidity. And then we could clone that. We have another sell side liquidity, because remember, we're marking out swing lows and swing highs. So these have not been reached yet. So these are still valid, right? So we could use these on our chart to look for potential reversals in the future if the market decides to come back down to these areas. So let's clone that one more time. And I'll show you again some more. Again, this would be a pivot here. a pivot here, a pivot here. We're just looking for strong pivots where we reversed to the opposite direction. If we're looking for sell side, we're looking for the bottom candles and a strong push to the upside. If we're looking for buy side liquidity, we're looking for some type of area where we reverse down to the downside. So we would mark this out as some sells, some buy side. Mark this out as some buy side. And again, now these, we can mark it as buy side and buy side. This first one began to work, but we failed the sell off, right? We did not continue lower on this trend, which would have told me we're failing to sell off. The market is too strong. We're probably going to look to break and hold. So what did we get? At some point, we closed above this buy side liquidity. We pushed right through this buy side right above that one. And if we look to the right, we end up using this buy side liquidity key level as an area that the market used as support. So this trading strategy is very good. It's very key to finding support, resistance, and just areas where people might be getting stops out, where instead of having our stops, we should be looking to enter our trades. Another way that people view buy-side and sell-side liquidity is by a previous day high, a previous day low, and a previous week high and previous week low. So right now we're going to take a look at the previous day highs, right? We're going to look at the daily time frame. We're going to take a look at how price reacted to previous day highs, previous day lows. So right here, the market rejected, holding below the previous day low. Gave us a nice push back higher. A lot of shorts were trapped in this spot, so we got a nice push higher. What happened up here again? Previous day low was rejected, failed to hold below, pushed back higher. Would we get some continuation? So it's really great to use this so we understand, okay, where's market going day by day, so we don't get caught on the wrong side of the market, because we don't want to be trying to catch this break below this wick if the market's not going to close down there, because then we're just going to be trapped buying or shorting the lows, and we do not want to do that. So we could look at previous weeks. Let's take a look at previous week highs and lows. So right here, we had a strong push below. Let's see. Right here, we had previous week high. So at this point, this candle, when this candle was formed, we rejected and failed to push any higher. See right here, we pushed higher and closed. We pushed higher and closed. We pushed higher, failed, and we got a strong push lower. So instead of being bullish this week right here, we might have been bearish and been ahead of the game and been ready to take some good strong moves. What happened the next week? We pushed back higher, almost an engulfing. It did not fill as an engulfing, but we would just keep an eye on that. Again, this is not perfect. There will never be a time that any strategy will be perfect. We did wick above this previous day high, which is huge because of the previous week high, I should say, because of the move that we had. So we would have, again, looked for some continuation at that point. So that is the weeks. And again, when we're looking at previous day high and previous week high, we're really just looking at the day or week, the candle right before. We are not looking that far out. If we're looking further out, then we are just looking for regular buy side and sell side liquidity. And for a lot of day traders who use buy side and sell side liquidity, now this is the 15-minute time frame, they might be looking for session high and lows. So we might be looking for something like the London session, the New York session. So let's take a look, and I'll show you guys a indicator you could use on TradingView to show you guys where the sessions are. So there are two indicators that I like to use, and that would be sessions on chart and sessions Lux Algo. Now I like the Lux Algo one a lot more because it doesn't only mark out the session itself, but it gives you the highs and lows of that session. So this is the high of Tokyo, the low of Tokyo, New York session, London session, and it's just, I like that a lot because then it sort of helps to show where that buy side and sell side liquidity is. So right here, this is Tokyo's high London session. We had buy side liquidity. We rejected. We got a push lower. We did fail and push back higher, right? And then what happened? We ended up continuing trend at some point. We had the sell side liquidity down here did not get taken. Sell side down here did not get taken. Again, it's just what we look for. This sell side liquidity right here. This is the London session into New York session. Right there would have been an area where people could have been going short, whereas we could have taken a long move right there. But again, we don't want to be fighting trend. We do have to watch and be aware of other things as well. The market is not just 1, 2, and done. We need to know what kind of market we're in, what kind of trend we're in, and what kind of time frame we're looking at. But as for this video, this is how to find buy and sell side liquidity. So this would be sell side liquidity. We grabbed sell side liquidity, got to push back higher. Now, a lot of times, if it does not work out for a reversal, we'll at least get some form of pullback, and that is because there are still stops there. Just because those stops aren't enough volume to reverse us does not mean we are going to just push right through. We'll get a pullback. So instead of trying to grab a short somewhere over here, chasing over here, we could wait till we hit that sell side, see what kind of pullback we get. Are we going to push back up to VWAP and fail? Are we going to push back just one candle and fail? And sort of get a gauge of the market in that way. So this is the 4-hour time frame. Here I'm going to go over a few more examples of buy side and sell side liquidity to sort of help you guys acknowledge and notice how to find them yourselves. So again, we would be looking for, this is the 4-hour time frame. We would be looking for some pivots, and we would be marking them out as right here is buy side liquidity. Mark that out as buy side. We have some more buy side up here. And then we could look for some sell side liquidity. Yep, some sell side. And again, we're just really looking for pivots. We're looking for areas that we would think, okay, we reversed here. People who went long at this spot most likely have their stop losses at previous swing lows or swing highs. So this buy side right here, this is because everybody who went short on this strong move lower now has their stops right up here. So the market reverses at some point, takes some time, comes back higher, hits all these stop orders. We even hit the buy side liquidity that's above that one as well, right over here. So that's 2 buy side liquidity areas, right? So that's a great reversal off that top one, just a quick wick and then a push lower. We would look for some type of fair value gap on the lower time frames. We see here, even on the 4-hour, we have a bit of a fair value gap, right from there to the previous candle there. So we grabbed the fair value gap, had our entry point right here, our stop loss right here, and we would be able to target sell side liquidity. So we'd have our entry point in the fair value gap. We would have our stop loss either at the buy side or the previous high. We would have our target down at the next sell side liquidity. This is a 6-to-1 risk to reward trade. Fantastic trade that I would take 10 out of 10 times. Alright guys, I do hope this video helps again. Take care, happy trading, hit that like and subscribe button. I'll catch you guys in our community. Take care, peace out. So this